Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. World War III has begun. It's just not in the way that you're thinking it's going to happen. We got the data. Let's dive in.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes. And if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. Yeah, Bob, I think we're going into a new age of warfare here. Can you expound on basically what's going on around the world with these countries and commodities?
Yeah, so when everybody thinks of war, the first thing they think of is kinetic war, which is actual fighting. And then the next thing people lean back on is the currency wars, right? But I'm here to tell you that the data is suggesting that the war is really going to be trade related, and it's going to be countries that own things that have tangible value are no longer going to let international companies come in and extract those items back to wherever they're selling them to. And you're getting a series of nationalizations, Phil. The latest one was kind of interesting because it's Chile. And Chile and I believe it's Bolivia are the two biggest lithium mining regions in the world. Even though lithium is extremely available from the periodic table, God has played favorites, and a lot of them are in South America. And so Chile has swung pretty hard left here over the last decade, and they're starting to command state oversight and state ownership of their two biggest commodities, which is copper and lithium. But they're not the only ones that have done it, Phil. Mexico kind of kicked this off, and that's when I've been on my rant to anybody who would listen to us, is that you have to own mining companies in countries that respect property rights. And what I'll tell people, if you're interested, just email us at tradegenius101@gmail.com and request some stock picks from me on commodities that you should own that are really U.S. and Canadian based because of what's happening here. You can't even trust Mexico anymore, Mexican silver. I'm expecting at any point for them to nationalize the silver mines, Phil. And in lieu of nationalization, what a lot of these countries do is they layer on higher and higher fees. And even the United States isn't above that. The Biden administration in the last budget opened up more areas, blocks for exploration, but they're taking a higher cut of the production. So it's really a worldwide phenomenon. But the one that was most concerning is they allow these companies to come in and do all the hard work, and then on the back end they nationalize it. And so, how many times are companies going to be stupid enough to do that? And they're eventually going to cut their own nose off because countries aren't going to go in there because they can't get guaranteed that they're going to get their return.
Right.
But they're not the only ones. Even countries that are quote first world are playing a different kind of trading game, and that's China. And when you see what's happening in China is they're trying, and they've used this before with Japan. It actually worked against them, Phil. They went ahead and they banned Japan because they're pissed the Japanese premier went into a war memorial for the soldiers who died in the fight with China during World War II. China banned the export of what they would call light rare earths, but they forgot that the Japanese are excellent engineers, and they went ahead and developed workarounds that they didn't need Chinese, and it killed the export ban. But they're at it again because now they're pissed off at us, and they want to hobble us, and these rare earths are used a lot in military applications and also in the high tech and then the EV space. So that's another avenue countries are taking, right? And then you have what I would call this the general theme of just resource nationalization in metals and miners. So you're going to see the first world countries are going to do it through fees and extortion on the front end, for environmental reasons. But the third world countries are going to just do outright nationalization, or they'll pair up with China and allow China to take a cut, and so that the elites in those countries will take a nice bribe for those granting those parcels to mine and to extract from. But the one that will scare everybody half to death is a little bit about what Russia's doing. And it's something that this is where the West can actually really come back, Phil, and really screw the world. Now we're talking about 30% famine, you heard people talking about that. Well, if this goes into effect, then this is definitely possible. If you flip the next slide up, is food protectionism. Now it's already started. Countries are safeguarding their rice, Phil. Indonesia's safeguarding their palm oil exports. And you're going to start seeing, wheat and corn and soybeans. And this is where China is particularly vulnerable because they only really can produce, where America, we typically produce 150 to 200% of our needs for soybean, corn, and wheat, where China is really only at 60%. So, that's why they're playing nice with Brazil and playing nice with Argentina, but they can't become the marginal producer out there, especially if the United States wrangles Canada and Australia into kind of an OFEC, I guess it's not OFEC, it's probably food exporting FEC, countries. And so, and that's on the horizon. If enough people start pushing back on the United States, you'll start seeing a lot of political pressure on, hey, maybe we shouldn't be exporting things. And, we're the world #1 exporter of natural gas too. So there's a lot of cards to be played here, Phil. And the bottom line is these things are going to cost more money. And so before I throw it over to you, is that my view on this stuff is it's going to get more expensive. And if you can own companies in countries that have property rights guaranteed, and pretty much you're just talking English speaking world, you're talking United States, Canada, Australia, and maybe some European countries, you want to own those commodities there, and that's where you're going to make your money.
Yeah, I agree. And I think food is probably the scariest one, even though maybe at the surface you wouldn't think that because of the inflation ties. And it's a staple, right? Some of these other rare earths will affect things like weaponry and things like that. But when it comes down to it, your citizens' well-being, I think it's going to take precedence. And so I think a very perilous situation when it comes to an already hot inflation environment. And then you're going to throw, because you and I have always talked about how the one thing the Fed probably fears the most is food inflation. And this isn't going to help it at all, even though I think the US is in a good position and the rest of the world probably suffers greatly. But still, it's going to impact everybody to a degree. So it's a tough environment. And I think that's why the proper stance is to be bearish going into the second half of the year. Now, speaking of that, we talked about charts yesterday. I'm showing you guys some charts. So let's flip over to the chart if you're okay with that, Bobby.
Yeah, absolutely, Phil. It ties right into what we're talking about.
Awesome. So this is the liquidity graph. We haven't shown this in a while, but we're at the point now where we got another risk off signal that fired here. And as you guys can see, that's been happening at points of where the market rolls over. Because of the length of time on this rotation up, we think this is probably due for a larger push back lower. So what we look for is when liquidity looks like it's rolling over, which it seems to be doing here. You'll notice a big decline here. Part of that is the Fed's being pretty aggressive at their balance sheet roll off, even though they added back for the banks. That was this big rise here. They're not wasting much time. And in fact, they've done 4 consecutive weeks of rolling off since this jump. Normally, they don't do that. Normally, it's 3 weeks on and then they take a week off. It's kind of like how they're measuring their pace of reducing their balance sheet, not to overwhelm the system, but they're playing catch up. So now we've had 4 consecutive weeks. And then Yellen's account is going up because of the tax receipts. So both of those things combined provide less liquidity for things like the stock market. That's triggered this to roll over now. On top of that, our fair value is up in an area where things tend to snap back down to fair value. So we could easily see, 200 points lower, maybe after we get through some of the earnings. We got big earnings on Tuesday. Maybe it happens then, but we're largely looking for price or at least this trend up to take a break now that we're past OPEX. OPEX expired today, options expiration for the month. And that usually will, whatever pinning effects that was there that gave the market a bit of a tailwind into today are going to be removed and actually is going to kick up some volatility for next week. So you want to be careful here because this is finally fired off. I think the market was enjoying some of the injection of liquidity from the Fed to bail out these banks. All of it to me is net liquidity into the system, and that ultimately pushes everything up. The other chart that you guys were asking about was Bitcoin. I'm going to keep it real simple. Bitcoin was enjoying this nice pump, got up to 31K or so, just shy of 31K. Okay, let me drag this over here real quick so you guys can see the numbers. Okay, so almost to 31K, rung the bell, a little bit of a head and shoulders pattern up here, and then rolled over. Now, Bitcoin, it was a matter of, ranges for Bitcoin. Bitcoin likes its ranges. So we've fallen back inside this range now, and we're getting in. What I told the folks today in the room, we got back to this midpoint earlier in the day around 27,800, and I said, look, it's do or die here. What happens? So now that we've broken through that midpoint, more than likely we're going to probably end up testing the lower end of this range. I think ultimately, if this breaks, we're going to end up testing this zone here. Okay, this is just a spot where the market took off in this next leg higher. And this would be similar to what we saw when this thing dunked back down to 19K and freaked everybody out. But in reality, that was just a big, buy the dip opportunity. And I still think that can happen to a degree if we get in here. Whether or not we get back to the highs again, I don't know, because liquidity is rolling over. Back here, liquidity was still coming into the system. Now liquidity is coming out of the system. So that's going to play a part, because if anything's very, very sensitive to dollar liquidity, it's Bitcoin, just because the markets for it are rather thin. It's a finite commodity at the end of the day. So that's what we're looking at now, going into the weekend, looking for, there is some support around 27 on the chart, but if that breaks, we're looking for a little lower, down to 26,700 or so. See if this level can hold. Maybe it takes out these lows, because that's what Bitcoin loves to do. If it gets back above 26,700, if it gets back above that, we could suck back up into the range and try to get back toward the middle and then the top end of that range possibly. Otherwise, look for a bigger dip buy down in this area. And that's pretty much it for Bitcoin. I think most of crypto is going to follow along at this point as well. So yeah, be careful going into next week now that we're through OPEX, Bob. And I think volatility is going to kick up over the next couple of weeks, especially with earnings next week.
Yeah, for sure. And, to your point here on the Bitcoin chart is that Mara, that's the one I follow the most. I started selling bear spreads against it because, we've seen the topping action here with Bitcoin is that Mara has taken a 50% cut in its stock price, and it has some gaps to fill down in the 6 and 7 area. And I think that's wrong to load up again. And just so you guys know, too, is I love WULF, and I'm waiting for that one to pull back. It hasn't quite pulled back enough yet. I think there's going to be an opportunity there to load the bus up on that. And the last point I'm going to make is, as trade collapses and this liquidity dries up that Phil's talking about, those who have a fetish for the dollar collapsing are going to get a rude awakening, because the reason why we produce dollars is we create trade deficits. And if we don't have trade deficits, then we produce dollar shortages. And that means the dollar is going to go up, and then it actually has negative effect on risk assets. So, the dollar's day is coming, but it's going to King Dollar's going to spike before he collapses. So yes, that's where I'm at on that. And then, I have some UVXY for June, Phil. It's due. I think the VIX has a hard time. It's basically a beach ball 6 feet under. You're trying to hold it right now with the volatility so low. And I think you're going to see the VIX pop.
Yeah, we talked about that. And I basically said, look at things like, some of the VIX ETFs, VIXY potentially, because, this is a weekly chart, but you're getting toward that bottom end of the range where, these moves are short-lived, but they're explosive. You could easily double your money here on VIX. And I think just with risk off firing and, fair value at the hedging territory, I just think things are set up for a spike in VIX. The tricky part with that, and where people get in trouble, is they don't give themselves enough time. And so like you could see here, even coming down into this is a weekly chart now, right? So you come down into this level, but really, when does the move happen? It doesn't happen until this is January 9th, 2023. You really don't get the expansion until March 6th. So several weeks. So even though you're getting down here, you have to allow yourself time. So if you're buying things like VIXY or something like that, just know that you may be dealing with some decay, because by nature, those ETFs have a built-in decay because they're synthetic products. And just don't go in super heavy yet. But within the next 4 weeks, I think you're going to start seeing this rotation back up. And I think it's going to be pretty explosive. People say, oh, the VIX is dead. The VIX is dead. Well, the VIX has been dead every time we came down here. And all of a sudden it wakes up, you poke the bear and there it goes. So it's not dead. It's just that the environment that we're in right now is pretty suppressive for it. But the fact that these things keep rotating up violently hasn't changed. The dynamics are still there for all of that to still happen. And it will happen. But it'll happen when everybody's lulled to sleep, much like what happened going into February. And then it spiked up on everybody. It's not going to be any different this time around, Bob.
No, and we may dick around here till like May 15th too, but May 15th to the end of June is fairly bearish, Phil.
Yep.
And then if we get a spike, pray for a spike, because then we could just sit back and sell volatility through the month of July and enjoy the beach and not do any other trading.
Right. And, like, it's hard to do technical analysis on the VIX because it's just either just being suppressed or it expands real quick. But what I tell people is like, look, anytime you're getting under the white line there, you just got to go in, hold your nose and go in and make sure you have enough time. And we're now getting into that. So this whole pocket in here is game for accumulating for a rotation up. You just have to be patient, but it's pretty reliable in that it comes up out of this zone. And I think all of the elements are there for it. And who knows, this might even take out the highs of the year. And that means a rotation up over 39. I think that's perfectly possible from this point.
Yeah, and look, and if you don't want leverage, just buy the June expiration for SVXY, buy the puts and just sit on them. And then, if you get anytime VIX spikes over 30, once it comes back in under 30, you could just sell volatility, UVXY puts and clean up, but it works in reverse too. Look, sometimes you get a double Dutch bus fill where you think you got a spike and it's coming back in, and then they do a twofer on you. So a lot of times if you go in these trades, either long or short, you're better off, dipping your toe in with a half size. And then if it runs on you, that's great. You take your money and you run. And if it doesn't run on you and it runs against you, a week later, put your second tranche in and then run with it, and you averaged in on it. You can do that both on the long and the short side. But you got to wait for events like now. So, there's a whole reason why VIX gets suppressed into the end of the third week, and the reason why VIX comes out of the third week with vigor. So, that's the market dynamics. And look, you can see it in the charts. Every 60 days, you're getting a spike. So just wait for the right pitch to come in and take advantage of it.
The other thing I'll say too is that as far as liquidity goes, because that's really driving most of everything, we're in a situation that's very similar to the beginning of 2022, which is over here. And you can see the expansion we got. We basically the same area that we're at now, all the way up to almost 39. And the situation is the same because Yellen at that point was running low on funds. The debt ceiling got raised and she was able to reissue a bunch of debt. So instead of her putting money into the market, money was going into the treasuries and the bonds. And so we're going to run into a situation again like that. Right now, it's the tax receipts that's driving up her balance, but shortly they're going to be dealing with the debt ceiling raising too. So just keep in mind that we're getting into another area like that. So going into summer, I know last summer we had this action here going into July, I should say, actually into June, and then we bounced into July. But you notice going into June, we had a big spike, and also going into May, we had a big spike. I think conditions are similar to last year, and so we're primed. So just be patient with this trade, but I think ultimately it's going to pay.
Yeah, look, people have to understand when Yellen is auctioning off bonds, if there aren't enough natural buyers, the banks have to buy what's left over. And that's what sucks the liquidity out of the stock market because they have to sell other things. So there's a reason why that happens. And she's going to be desperate for cash. So they're going to have a pretty robust season. And that's why you get these massive moves right now. When she gets back in the market, it'll probably affect the 10-year too. Phil, I just went ahead and did another 90-day T-bill at 5.06. And the minute they announced that they've got this thing under control with the debt ceiling, is that I'm going to have to protect my TLT position because I think the 10-year might push up, maybe a half a point or a point higher here, which is also going to be risk off for stocks.
Right. There's some serious headwinds ahead for sure. So I think that covered the charts we wanted to show everybody today. A lot of developments in the world, a lot of developments in the stock market. I think we're going to have a lot of volatility going into the markets into the next 4 to 6 weeks, maybe 8 weeks. Definitely going into summer is going to be probably a rocky road. But like I said, beyond that, we're going to have our regular bounces. So there's a lot of opportunity. And if you guys are interested, you can join us in the room. We're talking people through these trades and navigating these markets. And I think we got a pretty good beat on it because of all the tools that we have. So yeah, Bob, that's all I had for today.
Yeah, me too. Thanks, guys. We'll be back at you tomorrow and enjoy your weekend.
Take care, guys. Bye-bye.
Trade Genius.